Welcome to Search Insider Daily, where we provide you with insider advantage to surges in the market. Today on Search Insider Daily, there will be three main topics that we're covering. Number one, quantitative easing that's done by the US. Number two, rising gold prices fueled by. And number three, where exactly is Bitcoin going? What price would that be? Is it bullish? Or are we going to find a new low very soon? Now, before we cover the news, there is one main point I need to cover, which is an announcement that is for Search Insider daily videos. It's going to be uploaded between 8 a.m. to 8:30 a.m. every morning in Singapore time, which is GMT plus 8 hour. Alright, so without further ado, let's go with the analysis. Alright, so on this news that was published on March 23rd, just a day ago, the Federal Reserve just pledged asset purchases with no limit to support markets. Now, at this point in time, most people wouldn't be able to understand what exactly does it mean, right? But basically, what it means is there's nothing that would stop the US Feds from printing more money. It's quantitative easing. That means to say they're able and they're now able to print as much money as they want to support the economy, to buy into corporate bonds. So you can see here, the Fed's been moving for the first time to corporate bonds, purchasing the investment grade securities in primary and secondary markets through ETFs, and they are tempering into exchange traded funds, which is very rare. They have really not really done so before. And you know what it actually imply is that the general monetary policy, which is like lowering interest rate to 0%, it's not working. Fiscal stimulus is not, it may not be working, right? The bill is still being passed, the stimulus deal is still being passed. We don't know what's the result yet. But yet, the Federal Reserve has just pledged for that, which is unlimited printing of money and trying to push the price up. So of course, because of this news, we can see a few things happening, alright? So a few unwinding things happen. Number one, what's that? Is that we see that there's a strong Wall Street rally on Dow Jones and also S&P 500. So in fact, for S&P 500, you can see that we are now at this current juncture heading up. So I mean, Microsoft is up 6.62%, Google is up 5.5%. Now I'm not going to go into the individual equity, if not that will take a very long time. But what I want to draw to the conclusion is that because of the point that they are printing more money, investors are aware that the value of US dollars will go down. Now, with that being said, dollar strength has receded. And because it has receded, most of the other major currency pairs are going up against US dollars. Now, I'm saying most of it, but I'm not saying all of it. Now, commodity currencies or currencies that are a little bit of a risk on, example like Australian dollars and New Zealand dollars are heading up against the US dollars. And that's also because we see US dollars losing upside momentum. Now, even though it's losing upside momentum as of now, a lot of analysts and I do personally believe that in the next few weeks to come, US dollars will still gain back its strength and will still be so-called the safe haven, okay, or the safe hedge against the other forms of currency. Now, other forms of currency will still go through devaluation, but the problem is US dollars, or the issue here is that US dollars will still be stronger as compared to other forms of currencies because of what COVID-19 has introduced into the market. So much volatility, COVID-19 is going to impact it, and therefore we see gold prices heading up. Now, in fact, gold prices head up so much today. We're going to be covering the charts later and you will see how much it has went up by. But in fact, gold price extend rally, right, surges by most in 11 years amidst tight supply and regime of limitless stimulus. Now, as we all see the impact of QE, right? So QE happened yesterday. The news was announced like 1 to 2 days ago, depending on where you are right now. But because of that QE that's being announced by the Feds, what we do see is that people wants to get out of US dollars because of the possible devaluation of it or a potential hyperinflation in the US economy, which as of now, still pretty hard to conclude. But as of now, what we can see is that a lot of funds are shifting out to gold. And therefore, we see gold prices heading up. In fact, there was a supply crunch and therefore, we do see prices of gold heading up. In fact, we also see Bitcoin's price heading up, but does it mean there's bullish signs? Okay, so we're going to move on to the charts to figure that out. Alright, so right now we're looking at the charts. Okay, the first chart I want to cover very briefly is of course S&P 500. So we can see how much it has dipped over time, over this last week or period of time. So you can see this purple line was my kind of like my baseline where it all started, and we hit down of about all the way to about 35% downward movement. Now, during this period of time, we do see other indexes around the world, be it the Kospi, the Nikkei, the STI indexes, and also Australian index as well, all heading downwards, right? In unison with S&P 500. So what's happening now is that we do see a little bit of recovery. But my personal gut feel and from my personal analysis is that we are still fundamentally affected by COVID-19. A lot of nations are still affected by it, especially in the Europe zone and also in US, and of course certain economies in Asia. So what we do potentially see is that as of now, in the short term, perhaps we have some relief rally. But what's going to happen is in due time, because of fundamental reasons, unemployment will go up, unemployment rate will go up. More jobless claim will happen in the US. Okay, that's almost already foreseen, and it's already happening. In fact, right, more people are claiming for jobless claims in the US, and even unemployment rate in Australia is predicted to hit 11%. Okay, so we're gonna see an outbreak of unemployment in that sense. So fundamentally, most SMEs or even businesses will not be making as much money or revenue in that sense, and therefore they are unable to pay their staff, right? So we do see this happening in the aviation sector and the hospitality sector. So fundamentally, we're still very weak. We're still heavily affected by the COVID-19 virus, and so in the short term, even though there might be some relief rally, in the medium to long term, in the next few months to come, I do see even more rejection of price downwards towards a new form support. Only at a point will I be convinced to buy more. Alright, so I've actually purchased some S&P 500 ETFs. That's all I'm doing right now. When it went down by 30%, I think it's a good point. 35 to 30%, I think it's a good point for me to get in. And that's all I did, right? Very simple. And I didn't even buy in. I didn't call dollar cost average down during this 30% downward. I only just bought it lately, in fact today. Alright, so when I talk about Forex market, I'm just going to be talking about a few major pairs today. I will go into further in-depth analysis in the days to come. But as of today, I'm always looking out for these few currencies. Now, we're looking at Euro US, which is the most heavily traded Forex pair. We do see that there's a fundamental weakness in the Euro dollars. And one of the main reasons is because Euro is led by three main economy, Euro or EU per se, alright, or Euro dollars is led by three main economy, which is Germany, France, and Spain. And Italy, right? Which is and also Spain, of course. But they are all heavily and affected by COVID-19. In fact, they are one of the heaviest hit markets around the world as of now. In fact, WHO has declared that the pandemic epicenter is now in Europe. So what we do see is that Euro dollar will be heavily depressed. All right, it will not be devalued per se. Okay, maybe there's some QE happening. Okay, therefore it might affect the Euro dollar. But as of now, I do see more downward pressure. Like I mentioned previously just now, that US dollars will still strengthen over time in the next weeks to come. So do bear that in mind. Alright, and what we see here on the 4 hours chart is that we do see a death cross happening where MA50 crosses below MA200. We are trading below moving average 200 as well. So the cloud here, Kumo cloud, also suppresses price action. Now on the daily chart, we do see downward action as well happening, and we do see a death cross happening on the daily chart as well. We do see both our Tenkan Sen and Kijun Seng both going downwards as well on Euro US. So even though there's a relief rally as of now, I feel personally in the long term we should still be looking at downward action. Now, for US Canadian dollar, I think one fundamental thing we need to understand about Canadian dollar is that it's heavily linked to oil. And oil being the commodity here, we're gonna be seeing there's already an oil conflict going on right now, right? So Saudi Arabia wants to produce more oil, introduce more supply. They're lowering the prices, and therefore you see about $17 to $25 US dollars per barrel. And the impact is this: when you introduce more supply demand, okay, when you introduce more supply into the market, at the same time you're pressuring down the price, and the demand for oil all around the world is dropping as well. Why? Because aviation sectors are grounded, they're not flying, right? So if aviation sector, which requires most of the oil or the jet engine oil, is not demanding oil anymore, then you see some big problems here. Most people are staying at home. They have to stay at home, right? Because of social distancing. No one is traveling around. There's gonna be less driving involved, and therefore less oil will be used. In the manufacturing sector, in the industrial sector, they're all shut down, right? So there's less oil required to burn energy, to even run the manufacturing or the factories. So what we see here is that demand's going to have a shock, right? It's a demand shock. And then at the same time, if Saudi Arabia continues to introduce even more supply or lower the price, we will see that Canadian dollar will be heavily pressured. And in the next few weeks and months to come, I personally feel that Canadian dollar will continue to be pressured. We do see that, in fact, even on this trajectory that's happening right now, that US dollar is still strengthening against Canadian dollar, and I think this is a very good illustration that a lot of currencies, commodity currencies, especially like Canadian dollars, Aussie dollars, will be pressured because of the demand of their currencies that are weaker during this period of time, and so US dollars become a safe hedge for them. Now, some people might argue, why is Japanese yen not a safe hedge even? Of course, yen and Swiss franc has always been kind of like a safe haven, like a safe hedge for a lot of traders and investors. But at this point in time, even Japan itself, it kind of escaped from recession, right? The GDP is really declared to be negative. And so what we do see here is that it will, or it might be one of the first country to enter into recession soon enough, right? Production in Japan has dipped significantly by about 30 to 50%. So we will see what's about to unfold, but even if investors were to flow or go into Japanese yen at this point in time, even the Japanese central bank are printing more Japanese yen. So there's a lot of concern right now as we have COVID-19 happening all around the world, right? But that being said, the fundamental doesn't change, and we do know that COVID-19, it's kind of just gonna snowball, right? It's gonna get a little bit more, it's gonna get worse before we peaked, and then after that we start to dwindle down. So as of now, we've not reached the peak yet. We don't know when it's the peak. We don't know how we're gonna get to the peak. We don't know when the vaccine is gonna come. So all we can do is to understand the fundamentals of each currency and to play it to our advantage, and that's all we're doing. Now, Aussie dollar, once again, we're heading up, and so you can see that we're hitting almost the MA50. We are still pressured by the Kumo cloud, but one of the reasons why we are pumping slightly higher is that as Australian dollar being a commodity currency, we see that gold was rising up today, and therefore it gives an extra boost to Australian dollars. And of course, of the fiscal stimulus package that Scott Morrison, the Australian PM, has actually declared on that. But I personally feel, Aussie US is one of my favorite pairs to short, actually. And I've short it for the longest period of time. But my point here is that Aussie or Australian dollar has a certain weakness to it. In fact, it has already shut down most of its schools, most of its different businesses, only leaving essential business ongoing. It has actually banned off it has already introduced social distancing, and also banned off certain gatherings, certain things that's already happening. So it's already happening all around the world. The lockdown is happening. So the key question here is, will there be more liquidity in the market? Or are investors still fearful and still holding on to US dollars? That's something that I'm really curious about. Now, heading to gold, gold had a very nice run up today. It's wow. Okay. Now, the interesting point here is on 4 hours. On 4 hours chart, we do see a death cross. In fact, it happened for both gold and silver. On the daily chart itself, we do see that it's still above the 200 MA 200, so we're still pretty okay. But imagine that, right? On 4 hours, we have a death cross, but yet gold prices are denying it. They're heading above MA 200, breaking out of the cloud itself. So we do see where US dollars is heading to. So one thing that I could really just highlight at this point in time is that when we went from a high of $1,700 per ounce all the way to about $1,400, it was kind of because of a liquidity crunch, right? People take, or investors sell their gold to cover up their margin losses in their bonds or equities. And that was what was happening. But after that was done, and they were holding on to a lot of US dollars, they don't know where to go next. And when the Feds announced that they're going to be printing money indefinitely, printing as much as they can to support the economy, they know that these US dollars will devalue. So they have to flow into some asset class. They have to follow into something that they know that is stable, that they are familiar with, and therefore you see gold rising up. So that is my theory, and that's what the analysis can be. And of course, on top of that, you can also see that US dollars is devaluing, right? Because US dollars index is going down, and therefore people are pushing funds into gold. Now, of course, gold is not the only one that benefited from it, right? Bitcoin was the other one as well. But when we look at Bitcoin's price movement, or even price action as compared to gold, it has nothing to show forth as of now. It's a bit disappointing, being a big Bitcoin advocate like me, and it's not happening yet. It's a bit disappointing, but hey, halving is coming. Halving is coming in May. I think we are less than 50 days away from it. It's really exciting. I don't know what's gonna happen. Is there gonna be capitulation? Is there gonna be a liquidity crunch that comes again? That we won't know, right? But just a quick analysis on it, we do see that we have reached kind of like a double top situation in Bitcoin. But we also do see that the Kumo cloud is in green here. Senko span is currently, which is this green line here, is currently above the chart. So we're kind of still in a kind of like a green zone here and there. But further weakness in Bitcoin is to show. There are also certain analysts that are saying that we will go down one more time downwards towards another low, and before we start heading up to 20,000 to 10,000, whatever. Now, my bottom line for Bitcoin or for cryptocurrencies per se, especially for Bitcoin, right? Because most of my portfolio for cryptocurrencies is in Bitcoin, is that I strongly advocate for us to just look at it as an investor point of view. For us to really trade it per se, for Bitcoin per se, it's very challenging. So it's very volatile as well, of course, and kind of manipulated in a certain way. So I would personally say just get some, and just hodl or just hold it, and then we will see where it will go after halving, right? So I'm more interested in what will happen after halving than at this moment the price action itself. I track it still on a daily basis, but at the same time I'm less focused on it. I'm more focused on trading part-time, focusing on part-time trading so that you have more profits to flow into full-time investing. I think that is the way to go, rather than focusing on one key asset class and then trying, of course, getting good at it is good, but sometimes if the instrument is too volatile, it's very difficult for you to gauge or to even make profits from it. So for me, it's buy and hold and then wait for halving. 1.5 years later, we see perhaps if Bitcoin will go to an all-time high. So that's what I'm looking forward to as well. All right. So thank you guys for tuning in. This is my last instrument that I'll be covering for Search Insider Daily today. So so do like, comment, subscribe. Let me know what is it that you would like me to improve on, or what is the things that what other instruments you want me to talk about, and we'll follow up in the next episode. I'll see you guys.